everyone, my name is Jan. I'm from profitblue.com and I'm here to introduce you P&L, also called profit and loss. Here we go. So first I want you to say what is P&L. P&L is the most common financial analysis used by large companies. You may see some big tech companies or any other big tech companies that use the P&L in their financial reports. It's mostly the table that says if you are in profit or in loss. It shows all of the important data such as revenue, gross profit, variable cost, fixed cost, EBT, taxes on income, and profit and loss. You may be asking why you need that, because you don't do some financial reports. If you are not big company, you are just small e-shop, why you want a profit and loss? And my answer is very simple. If you don't have the profit and loss, you will be in a big trouble in few months, few years, because the financial reporting is one of the most important things you need to know to financially manage your company. If you know these terms, if you know how they are used, you have a big competitive advantage compared to your competitors, because they probably don't know about it. So we can go to all of these important terms and say what they mean and say how they affect your profit or loss. One of the most important things about profit and loss is your revenue, because revenue is what you get from your customers and how much your customers pay to you. So revenue have two subcategories: sales of goods and shipping and fees revenue. Sales of goods are the sales for the goods themselves. They vary from the shipping and fees, that the shipping and fees are only the revenues that you get from the shipping, such as, I don't know, UPS, FedEx, and fees such as COD, cash on delivery, or any other fee you can have set up in your WooCommerce store. Revenue is fully automated in our WooCommerce plugin, and it's getting these numbers from orders themselves. Another thing you want to know are COGS. COGS are cost of goods sold. That means that these costs are the cost you pay to your suppliers for products. You buy for $10, you sell for 100. These $10 are cost of goods sold. Another thing is gross profit and margin. Gross profit is the profit that you get from revenues and they are decreased by the cost of goods sold. Gross margin is the percentage evaluation of this gross profit. For example, here we have 97%. Another thing are variable cost. Variable cost increase based on the volume you have on your store. If you have 10 orders or 100 orders, there will be big difference between the absolute amount in these costs. Because, for example, you can set up that you have the commission of 2%, and if you have 100 orders and 1,000 orders, the difference will be very big in absolute numbers. You can have, for example, shipping costs, payment fees, cost for wrapping material, cost for handling, and also you can have the ads. For example, we have Google here. Then we have the margin after COGS and variable cost. This is the margin that you get after the COGS and variable cost. It's basically the revenue decreased by COGS and decreased by variable cost. It's very important for you to get the unit economy, like how much you actually make for every single revenue or every single dollar you get, how much you actually get after variable cost, because you want to know how much you keep after, for example, commissions, after wrapping material, because these costs are directly connected to your sales, because you just can't skip the wrapping material. You have it in every order. Other are fixed cost and income. Fixed cost very fastly. Fixed costs are the costs that stay constant over time. And it can be, for example, rent of your office, rent of your store. It stays on, for example, $1,000 every single month, and it does not increase. Another thing is income. Income can be some bonuses from your suppliers. For example, if you sell, for example, if you sell 100,000 of products, you get, I don't know, $1,000 every single month. Then you can put it over here and calculate with that. The income is not the cost, so it adds money to your profit and loss. Anyways, the cost, fixed cost and variable cost, just get money out of your company. These are costs. They just cost you some money, right? Then we have EBT, earnings before tax. It's basically the number that you get after COGS, variable cost, and fixed cost. You get some EBT. Then you have taxes on income. It's the taxes that you pay to government directly for your profit. And then you have real net profit and a loss. You can see that after $170,000, we only kept $128,000, which is 75% net margin. And you can see that from this 100%, from this amount, it started to decrease, sometimes pretty slowly, sometimes it can be pretty fast. Depends what are your expenses mainly. Important feature is also that export to Excel file. You can export it and work it as you want in your Excel. Another thing is you can set up the year to date, which is cumulative view. It means that in this view, these months are getting compounded. So if I have, for example, $170,000 and $292, it means that I have $170 in January, but in February I don't have $292,000, but I have only the difference between these two numbers. So it's something about $122, if I count it right. Yes. And it goes, every month. You just get, in March you get the compound of these 2 months plus the March. In April you get the compound of these 4 months, etc. Another thing, you can see that, for example, in this month to date, which is the basic profit and loss, you go to last year and you can see that there are some data from the last year. You can also analyze the last year and compare it, and yeah, that's it. I think this is all you can do with the profit and loss. All of the data are being set in the data settings, or they are totally automated from the WooCommerce itself. If you want to see how these data are being set, you check our next tutorial about data settings, and you can try it out, give us some feedback, and I'll be happy to see you in the next videos. My name is Jan. I'm from Profit Blue. Bye bye.